right, we'd like to call this special Board of Education meeting to order.
Roll, please.
Yes. Mr. Sikich.
Present.
Mr. Schultz.
Present.
Mr. Lee. Mr. Ustruck is excused. Mrs. Justum.
Here.
Ms. Klug.
Here.
Mr. Bailey.
Present.
Mr. Keller.
Here.
President Emmons.
Here. Tonight's special Board of Education meeting is our annual public budget hearing. And tonight we will be hearing from Mr. Weaver, who will be going over our proposed 2018-2019 budget. And first, I just want to say thank you for all the work that he and his department have put into this budget, and for taking the feedback and suggestions and all of that good stuff that we've offered and have taken from community members and have put that to heart and have delivered a very thorough, very comprehensive, and very well vetted, even to this point, budget. So I look forward to seeing the presentation tonight. Thank you.
Those team members are on the back of your packet, those that help out in the business office, and I just want to recognize them and for their time. And their names are Joan Rankin, Jessica Spencer, Janice Lewicki, Mary Capel, and Nicole Weeks. So tonight we are going over the presentation that we've gone over a couple times up to this point, so there's not much that is different. Now, we're not going to get the drilled down detailed view that you're accustomed to see, but if all works out in the next couple days, when your financials come across, you'll then see it in that detailed breakout of teacher, educational assistant versus math versus science and all the different detailed views that you're accustomed to. So this is more on a higher scale, if you will, and what was placed into the newspaper 2 times, and again, it's in your packet that's in front of you as well. So we'll begin. Always start out with the mission statement. The West Dallas West Milwaukee School District develops inquiry-driven, independent learners through instruction that is personalized and engaging, with a focus on college career readiness and 21st century skill development. And that was our goal as we developed this budget. I want to thank you guys. Obviously, you are part of the wonderful school board that we have here. And I also want to thank our leaders that mostly are behind me, all of our directors within our district, as well as other leaders within our school district as well. So we still have a couple items to get to in the budget adoption timeline. Although we're having this meeting right now, third Friday is an important day. That's our pupil count that will have an impact on our final numbers, so I'll go over that when we get into the presentation. We do have the October 1 date, which is the tax apportionment valuation certification. We have our final state aid calculation released by DPI on the 15th of October. You will then vote on the 22nd for the actual tax levy. And then finally on November 6th, we actually certify those tax levies to the municipalities. So how do we get up with that? How do we get to that revenue limit? Where did we get that number from? So if you recall, each time we proposed, and this did not change since the one in August, this is the revenue limit worksheet. This is the exact same one that you saw August 10th, I believe, when we last met about the budget. So the way it's computed, if you will, on a very simplistic basis, is we take the base revenue from 18-19, sorry, from 17-18, that's not in there correctly. We divide that among the base membership, so that's 2015, 16, and 17 student counts on third Friday, and we get a base revenue per member. That member would be added to any pupil increases we get. Unfortunately, we are not receiving a per pupil increase this year. We then take that per pupil revenue amount, which is $10,023.93, and we multiply it out by current membership, and that's the membership from the last 3 years, 16, 17, and this school year, and that's why it's not official yet, because obviously we are waiting on third Friday numbers. Now that is a guesstimate, the 8,341, although as we start trending with enrollment, it looks like we're going to be very close to where we projected, thanks to Jeff Borland and his team. So when you multiply that 8,341 by that $10,000 per student, you get a maximum revenue limit of $83,609,600. Now, we are a declining enrollment district. We've talked about this. Our enrollment is going down. So there are a couple of exemptions that kick in to help us as we move forward. Those are the hold harmless, which is to help prevent that slide downward from revenue. It helps us get from year to year. We get the declining enrollment exemption, And then we also have our energy efficiency net exemption, which is the cost that were approved by board resolution, less our savings. That is also an exemption we receive. So when you add those on to our maximum revenue, we have a revenue limit with exemptions of $87,691,960. So that's our main number that we have for the school year. So that number, as you know, comes from two places, either from state aid or from local taxes. So we are estimating right now that we will be receiving $46,034,000 from state aid. There's other amounts that are outside of that number, $908,000 worth, which is high poverty aid and computer exempt aid. I didn't include that in the $46 million, but you can add that on top as well. And then we have the levy from Fund 10, Fund 38, and Fund 41. That levy amount is $40 million, as shown on the slide. And then we also add in the levy for our community and rec program, which is $3 million, as well as tax chargeback. Tax chargeback are uncollected taxes. That amount added with the $40 million from our levy of Fund 10 and 38 gives you a total levy of $43,797,804 is the projected levy for our taxpayers. When we take the estimated equalized property value of $4.2 million and divide that into that number, you get a levy rate of $10.22. So I'll give perspective of that $10.22 in a moment towards the end. That is a decrease from last year, and I think that's a good thing. That's what we've been working for. So our revenue limit trend, as you can see, we were increasing, if you will, in our revenue limit the past couple of years, but now it's beginning to come down. And again, that main driver of that would be our enrollment. I anticipate that it will continue to go down until we equalize or level out our enrollment and then begin increase, which we can anticipate at some point in time just by trend alone. This is an interesting slide, so it kind of gives you a little bit of a understanding of what took place last year with the change in our tax levy. So if you look from 13-14 and 15-16, even 16-17, there was more equalized aid received by our district and less from our Fund 10 levy. Last year, it was very equal, which then drove our tax levy up as we saw last year. Again, it wasn't because of anything other than us saving money, putting money back to our fund balance, but as we discussed, that had a negative impact on our tax levy, but it was something we had to do to make sure that we build up our reserves. This year, we are not back to those levels that we were at, but we are starting to see receiving more state aid and less dependence from our taxpayers. So again, that trend hopefully will continue. Again, I think it'll be very similar to that of next year. We are anticipating the sale of the building by the end of December. That is our goal. So when we do receive that funds and we allocate that to fund balance, that is going to have an impact on our tax levy, but hopefully with what we've done this year, it will be very similar to what we will see this year. Tax levy rate comparison over time. So again, you can see it's relatively stable. Last year we did go up by that $1.30, I believe it was, and now we are starting to go back down. Again, that's for 18-19, 19-20. I would say it's going to be somewhere similar depending on how we end the fiscal year of 18-19. So a little bit of general background. I'm going to quickly talk about what is Fund 10, what is Fund 27. Those are the biggest funds we always talk about when we talk about budgeting, so I will go over those two. And then I'm going to go over what revenues we anticipate from for Fund 10 and Fund 27, and then what anticipated expenses we have. And then I'll do that for each of the funds that will impact our levy down the road. So for Fund 10, that is our main fund, if you will. It's used to record all the financial activities for the 18-19 school year or whatever school year you are a part of. We also have our Fund 20s. We have Fund 21, which is a donation, if you will, fund where we keep track of those donations. So a great example would be the Buckton property. When we sold that house, it went into Fund 21. Fund 21 does not impact our tax levy. Fund 27 is special education. It's for students that are receiving special education in the schools. This account is a washout, so we use it to track our expenses. We use it to track our revenues, but at the end of the day, it's zeroed up. So any costs that are above and beyond what the revenues we receive, we have to pay for it through a transfer from Fund 10. So this is a generic, if you will, just to kind of give you an idea of where are the revenues coming from for our Fund 10 and Fund 27. You can see we're pretty evenly split between general, state, and property taxes, and then there's other components within that that I will get to right now. So specifically, local sources, there's 42 million. There are a couple little others amounts of money we receive from local entities. Inter-district payments, that's 6.3 million. That's an estimated amount, but that's the amount we anticipate receiving for open enrollment. State sources and federal sources, you really don't see the tie to that state aid we spoke about earlier, but this is also where we capture some of the grants that we take in each and every year. AGR, Title I, Title II, Title III, even Title IV, all of them fit into the state and federal sources. And then we also have our other sources, which can be fees, can be rental, any amount incoming that we receive in that area. So for our expenses, some of the things that we focused on through our discussions at prior proposed budget meetings, we focused on CPI for all staff, and that was accomplished this year, and we were able to afford that within our budget. We also still have fully calculated in this budget the $2 million allocation that we wanted to provide to all employees. That is still calculated within this budget. As we have worked through and as we have discussed through workshops, although 9%, that is an increase for health insurance, but what we were originally projected to be at, around 18%, we were able to dwindle that away with a little bit of change to our program plans and work with WEA Trust. They've been a great partner, and we're looking forward to the benefits of the Wellness Center and hopefully seeing that number even come down in subsequent years. We did have the addition of the Human Resources Director within that budget. And we also added in, and this was the last budget meeting we had, where I added in a line item for safety. So having a dedicated amount that we purposely plan for each and every year. That's for updates, upgrades, training, and identifying. This is above and beyond that grant that we received. So these are actual allocated money from the district funds. Focusing on the Deeper Learning Initiative, again, that was a big focus for us curricularly and instructional-wise. So we wanted to make sure that we put some money into that aspect, whether that's for covering subs so that teachers can get into other classrooms or professional development opportunities, but providing that education for our staff so that they can be the best they can be for our students. We did prepay Fund 38 debt, which I'll get to in a short moment. And then we did dedicate funds to Fund 43 and capital improvement projects within our budget. So we did not borrow for that. As we talked about through the budgeting process, we wanted to make sure that stayed within our budgeted amount. The sale of the building, just for the sake of this document, is not considered part, like it had not happened. And the reason I put that in here is because, again, that impacts our short-term borrowing. So at this point in time, I'm assuming we didn't sell the building, so then I plan for the expenses that came about from short-term borrowing. When we do sell the building, we will work with Springstead, who is our financial advisor, and we will work out a better deal for our short-term borrowing so we're not spending as much money there. And again, it's a conservative approach when I approach the budget. We don't want to anticipate more students than we expect. We don't want to anticipate more open enrollment in or out. We wanted a very conservative amount so that if there was fluctuation, we could handle that within our budget. So our expenses, again, a large snapshot, if you will, from above. Like any budget, the majority of your funds will go to salaries and benefits, as you can see in this graph. Followed closely by purchase services, which can be anything from transportation to food, thank you, I'm going through it all, but all those personalized services go through that 19% or so that we have, and then the rest are just little amounts, such as supplies. I actually show you the gross amounts, if you will. On this page, you can see them. I don't want to read them, each of them for you. But if you look at the bottom line, when you compare revenues to expenditures, I'm still allocating $500,000 towards fund balance. This is important for multiple reasons. A, we want the commitment to our financial stability, but B, in case there anything we didn't anticipate, something happens, anything, there's still some money there that we can allocate if needed or need be. But again, with that fiscal planning approach, conservative approach, we are still allocating money towards fund balance. So Fund 30s. We have Fund 38 and Fund 39 are the ones that everybody always hears about. Fund 38 are non-referendum debt service levies, and then you have Fund 39, which are referendum debts. For Fund 38, we had that prepaid amount of $3.4 million that we paid from 17-18 into the 18-19 to give us flexibility with our operational expenses. And then we are levying for about $500,000 to cover the total amount that we need to levy for or have reserved for of the $3.9 million. Our expenses are just under that. It's important to know that revenue is based on the calendar year, expenses are based on the school year. So there is a little bit of a difference between the two, and that's purposeful. In the end, they should wash out. For Fund 39, the revenues are zero. We do not have any Fund 39 debt, so expenses are also zero at this time. Fund 49, energy, go ahead.
I'm sorry, I think this is an important point. So Fund 39 is something that we had been paying on until recently, right? And so
Last year was our last
debt, and
payment.
it was from, when was that referendum passed?
The one that we just paid off?
Right.
I don't have that with me. 2010? I don't remember.
10 years ago?
Yeah.
At least.
Yeah, I thought it was like '08.
Yeah, I think that sounds right.
But yeah, you are correct. We have no more
So we had been
referendum
paying
debt.
that off, and so we had paid that off this last spring. So
Correct.
that's something we had previously budgeted for. And that money that we had previously used, we were putting towards other debt service now, correct?
Correct.
Okay,
Correct.
just wanted to make that point.
Thank you. Fund 49. Fund 49 is our capital projects fund. Energy efficiency fund comes out of this as well, or our energy efficiency project, I apologize. We do have to account for this separately, so it's kind of like Fund 27 in that aspect where you have to keep it in a different fund to keep track of it. Any deficits must be paid from Fund 10, but right now we do not have a deficit. Obviously, we still have funds reserved that we have not spent from our energy efficiency projects. So currently, we have no revenues coming into Fund 49, but we will be expensing around $7.9 million. It's a ballpark, but that's the energy efficiency projects, the Act 32 projects. We've only spent about $4.5 million of the $12.8 million. This is an additional $7.9 million. Will we fully expense during the 2018-19 school year? We still don't think we'll be done until the summer of 2019, so that's why I didn't allocate the full amount until, we'll do it one more time. So next year you'll see this line item as well. But we will not be receiving any revenues. So when you look at the fund balance, it started out as $10.4 million. When you take away the 7.9, there will be about $2.5 million left for Act 32 projects. Again, that's just going to be dependent on how much work gets done during the 18-19 school year and how much is left. We focused on all the roofing, but we still have boiler projects and some flooring and other aspects of that money. Fund 50 is our food service fund. Food service, again, is much like Fund 27. So we cannot have a negative balance. So anytime we have a negative balance, we have to pay that from Fund 10. We actually currently have a healthy fund balance in there, and I will talk a little bit about that with this next slide. So right now we're anticipating about $4.1 million in revenues, and that's solely from lunch fees, federal income, and state income that we claim from lunch, breakfast, snack programs, and so on. Expenses, you can see the line item of expenses, but we're also making some upgrades to some of the kitchens. We call them our what do we call them? The walk-in cooler, our production kitchens. We're spending some money in our production kitchens to enlarge our coolers, more efficient freezers, and those are at Hale, Central, FLW. So you're going to see about $500,000 in capital objects. It will have no bearing on Fund 10. That will all come from Fund 50 and will not impact the classroom fund. So those are really nice little nuggets that we have in our budget. We still have, well, I'll show you in the next one, we're still going to carry around a $2 million fund balance if all plays out during the 18-19 school year. I've talked to Steve, and we're going to continue to identify some opportunities within our kitchens and within Fund 50 where we can appropriately use those funds to make some upgrades that are necessary. This year, we were able to add one more school to our community eligible program, that's CEP. We will now have 10 schools participating. That's free breakfast, free lunch for every single child, whether you qualify for free reduced lunch or not. This year we added Madison Elementary, that's why it's starred. The goal is that we continue to add on schools, but we have to do it, relatively carefully as we move forward, because again, you don't want to impact the bottom line where we're ending up paying for these programs. But the goal is that we add on a school or two each year, and hopefully down the road at one point be able to sustain as a free and reduced lunch school district where all students get free lunch and breakfast. So slowly we add on. Madison was this year, and potentially be looking at Frank Lloyd Wright for 2019-20. The last fund, the big fund, this one also is part of the levy, that's why we are going to be talking about this, is our Fund 80 Community Service Fund, which we have a workshop just after this regarding this fund. It is used for any community program that we service our communities. So you get the guides, fall, spring, winter guides with all the programs that are available for all of our citizens. This fund is funded through our levy as well as some of the fees that we collect. So our revenues for this 18-19 school year, we're expecting around $3.9 million. $3 million of that is from the levy, and $930,000 is roughly what we expect from receiving our fees. This is another area where our expenses are going to overreach what we're bringing in, our revenues. So as you're going to see, we are budgeting, zero-based budget for salaries through other expenses, salaries, benefits, supplies, et cetera, matching the revenues of $3.9 million. But we're also anticipating, I apologize, I was a little off on my guesstimate when I did this for the public hearing, but I estimated that we'd pay out about $3 million towards the building of the rec center. It probably won't get that high, but I wanted to allocate some of that money and make sure it's there. But that's with building construction costs of $3 million in the 18-19 school year. I don't think it'll be that high, but again, I just wanted to capture it in this so that you can get an idea that we have a fund balance currently of just over $8 million. After you take in the revenues and take out our expenses, we will still have a fund balance of around $5 million at the end of 18-19. Again, how much do we pay for the construction during the 18-19? I don't know. Hopefully we find out a little bit today. But I had to make an assumption and an estimate for this presentation, but also the DPI hearing that was due earlier this month. So our projected tax levy, went through all of that earlier. We do have a levy, or a mill rate, I'm sorry, or a levy rate, if you will, of $10.22. So comparing it between years, if you will, you are seeing that we are decreasing by about 6.5% over last year. It is important to note, though, that although it was $10.99 last year, that was without taking in all revenues from our taxpayers, right? So we levied less to bring that rate down. So that's why it's at $10.99. I want to say it was originally, $11.45. I put it on that slide. So originally our levy was $11.45, and we brought that down to $10.99. We are looking to be at about $10.22. Again, that's going to impact our communities a little bit different depending on where you live and which communities, but we should all feel that reduction in the levy overall. So that is kind of the nutshell of what we're proposing for the budget for 2018-19. In the booklet, I did place in the actual DPI hearing document, which is on page 10 and 11. But this is what was actually published, and talked through that for Fund 80 and a couple of the funds of here's your beginning balance, here's how many revenues we expect in, here's how many expenses we expect out, this is where we expect the ending balance to be for the fund. But that's all in your hearing booklet as well. And again, with the next financial statements that are due to come in front of you next week, Monday, you will then see that broken out view per budget line item as well.
In the booklet, it states the percentage of mill rate decreases 6.98%. In the presentation, it's 6.54%. Considering that the booklet is what was published in the papers, I just want to ensure which is the correct number.
Is that on page 11?
That is on page 11, yep, right at the bottom.
Does that take into account the original mill rate of last year versus what it was after we took money out of fund reserve to pay it down? Is that the discrepancy?
It could be, I can look into that. It's still based off of the 1022 though, but you are correct. It's still a decrease, but I can figure out the actual percentage and get that updated if you
Just so
will.
it's clear, since it's went to
Yep.
the entire community, just to make sure. that
Absolutely.
I don't want to think that we're trying to say it's less than it's supposed to be. I did have two other questions.
Sure.
You mentioned about the per pupil increase, that we didn't have an increase this year. I'm slightly confused by that. I thought that the governor had given us a $204 increase last year and a $200 increase for this year. Is that not correct?
That is correct. That's categorical aid, so it's not per pupil, it's not part of the revenue limit, it's on
Right.
top of that. So
Right.
correct though, you are right.
All right, just want to make sure
Yep.
that's clear. And then lastly, the equalized property value rate is an estimate right now.
Correct.
So as you said, on October 1st, that's going to be certified, so that in and of itself could change what actually is affecting the levy rate, because if that goes up or down,
It could impact,
could
because again, it's
impact what that
divided
actually
into that
happens,
number,
so-
so you are absolutely correct. So it could change, and again, it is municipality specific as well.
Right, right.
Once we have that, I could recalculate it. I don't want to put up more information that could change, but I think it's important. I can try to update that and get it on the website.
I mean, if it shows a big change, like it goes up by a nickel or down by a nickel or something like that, I think that would be something useful to know, just so that if we're approached by community members about it, we can at least speak about it intelligently. Obviously, knowing that West Dallas might be different from West Milwaukee, which might be different from Greenfield,
And New
different
Berlin.
from New Berlin.
Yep.
That's all I have. Thank you very much.
Nope.
Thank you for all the work. I know I'm a demanding person for
No,
these
you're
questions,
not.
things I ask, so thank you very much for answering those questions and providing the details, things that I've asked for and the board has asked for. So you and your team have done a great job, in my opinion.
Thank you.
What other questions do board members have? Or from the audience?
Oh, someone in the back. No, there's no one here.
If there aren't any other comments, do you have any summary, any parting words on the budget or anything else?
I do.
Next steps are,
Next steps are, so Third Friday is a big day for us. If you've been watching the newsletters, Beth, Kayla, and her team have done a great job of getting the word out, getting students into schools. Again, Third Friday is it's important, but it's important to be in school every day, all day, and we're just trying to emphasize the importance of being at school. So her team has gotten the word out to get students there. Again, that will impact our bottom line for this budget. But again, it's planned conservatively. So any changes, anything small, big, I don't want to say big, but anything small that we didn't foresee, we will be able to absorb in the budget.
I actually think one more question. When it comes to Third Friday count, it's not related to, well, it's kind of related to the budget. I had a question for a community member regarding when does it count? Is it at attendance that you have to be there? If they have to leave early that day, does that not count then? So that was the question.
Well, that's why I stopped and looked at Marty. We obviously want them there. So Third Friday, if they're there, they count, right? But there's these counts that all come into factor and play, right? Were you there the day before and the day after? Okay, that counts. Were you there the week before or week after? There's all these
Okay.
variations. So if you're sick, totally get it. Everybody gets sick. The important part is that you call in, that you get that absence excused and get to school as soon as you can. But great question. I just didn't want to say, oh, it doesn't matter. No, it matters. But there's some give there.
So community is hearing the message and are like, well, they had a doctor's appointment or something and they had to leave early. Does that mean they're
Go
not going
ahead.
to get counted?
Yep.
So,
Yep.
thank you.
Absolutely.
all right, thank you, Mike.
Good. Thank you, Mike.
And thank you, Mike.
Yeah, absolutely.
All right, we'll take a quick break, and then get ready to do, we're gonna take down the cameras after the hearing, and then we'll get ready to do the rec update.
Awesome. Cool.